Happy Monday, members of the Altcoin Buzz Army. Hope you're having a great start to your week. And although we never offer financial advice on this channel, I think it's quite apparent based on the patterns here, we're able to deduce what the smart money has done over the course of these last few days, over the course of this weekend, where we had possibly, you could call it a round two flash crash, not even flash crash, it was like a slow, drawn out capitulation, retesting some of those lows, arguably, that we saw from the 19th of May. But we've rebounded sharply, up 17%. I can't remember the last time I saw the market on the daily up 17%. Bitcoin's up double digits in the last 24 hours. So is Ethereum. Wow, up 21%. But really, to get a sense of some of the biggest gainers, you got to sort by the last 24 hours. Maker up 76%, Polygon up 75%. Some of our favorites here, Telcoin, Harmony up nearly 60%. And going down the list here, you had some great opportunities to pick up PancakeSwap, VeChain, VET up 41%, and Chainlink up 41%, as well as Terra, Uniswap, and others. So again, we never offer financial advice, but the common wisdom is that you want to buy the dip. You want to buy up money when blood is running in the streets, because once the dust settles and the clouds clear, this is kind of the reward. And this, again, I kind of phrased it, or I worded it this way previously. This isn't a week later or a month or a year or 5 years or 10 years later. These are double-digit gains, in some cases nearly 100% gains 24 hours later. Absolutely crazy. I want to highlight one of our favorites there that we just touched on. Chainlink is in the news here in a couple of big ways. And then I want to kind of zoom out and take a look at what's sort of, I guess, fueling this. We know it's been fueling the recent FUD and all this pandemonium, but now I think things are pivoting for other reasons that we'd like to revisit. We'll do that in the latter half of the video. But first, we have this Chainlink news. @Chainlink is the official Twitter handle. Dynamic NFTs, non-fungible tokens, and on-chain gaming applications require a verifiable and provably secure source of on-chain randomness to generate unique user experiences. Learn how to integrate Chainlink VRF into your dApp today with the Chainlink developer documentation. So a little bit of self-promotion there, I suppose. Autonomy 3 also here with Chainlink use. They're using Link with its B2B SaaS platform for parametric insurance. Chainlink is providing flight data and arrival/landing times aggregated from multiple high-quality data sources, enabling Autonomy to automate their cargo insurance claims. In other words, all around positive updates for Chainlink. When look, this is, I guess, a case now that can be made for insert your favorite altcoin. Whatever your favorite project is, I think the case can be made that collectively altcoins fell so much over the course of these last few days that for those of us following our favorite projects, and Chainlink is among my favorite projects, we just looked at it and almost laughed. It's like, this is ridiculous. Like, this is so foolish and irrational and illogical and ridiculous. Take a look, by the way, at the dominance of Bitcoin, which is rising. That's how much altcoins have capitulated. Partially, this figure right now is due to the rising strength of Bitcoin coming back, but I think a larger factor has just been the fact that altcoins fell off a cliff. And if your favorite project is down 20, 30, 40, 50, 60, 70, 80% or more, and nothing has changed, the fundamentals are stronger than ever, the network and the metrics are stronger than ever, why would you not pick up your favorite project on an 80% dip? Now, Chainlink didn't fall quite to that level, but I saw some prices that were blowing my mind, like $17, sub $20 Chainlink. It was absurd. Taking a look here at the low, yeah, this is according to CoinGecko.com. We're seeing lows here in the range of, wow, under $16 for Chainlink. And when I look at that, I see an asset that should be valued in the hundreds of dollars on sale for sub $17, sub $16. And different analysts have different opinions about it. But, again, Chainlink is just one example. Extrapolation of the Link one-day chart, because I'm bored. Link one day has followed this trend line purportedly since January of 2019. It's only deviated twice, May 19th and March 20th. Following these deviations, Link has proceeded to pump about 1,100% each time. And a 1,100% pump from here would put us at about $250 or so-ish, end of year, possibly. There's an argument to be made right now that we are in a bear market. I see some people that have been, asking the question, are we in a bull trap or are we in a bear trap right now? Which way is it going to go? And nobody can be definitively sure of that, but with all the news that we've been talking about, with all of the behind the scenes metrics and the accumulation of Bitcoin by institutions, some of which have dumped, by the way, some institutions have dumped, but it's my firm belief, especially based on what New York Dig has been talking about, in the sense that hundreds of banks are acquiring Bitcoin to be able to offer cryptocurrency, not only assets, but products and derivatives and all kinds of different services. I think I'm kind of falling into the camp that no, the bull market isn't over, and there's different metrics for that, but maybe it's going to be a little bit more drawn out than we would have expected. I no longer think we can really necessarily anticipate a peak to the bull market, assuming we remain in the bull market. We won't be able to see a peak in, the September, October, November, maybe December timeframe. We may. I mean, that's the thing about this space. It's so unpredictable. But I think it's all just going to be a little bit more drawn out right now, which is good news, by the way, because the more drawn out this is, the more you can take advantage in the interim months of these prices being on the dip as they are. But then again, it's crypto. We can move $10,000, $20,000 in a day. Nothing would surprise me anymore. Talking about Bitcoin, of course. Here's some information and some data, however, that would suggest that things are still looking positive. We're looking here on CryptoQuant.com at the total outflow of Bitcoin by the miners. So the total amount of BTC transferred from all miners' wallets. And you can see we have this precipitous price decline here, as evidenced on the right side of the charts, all the way from mid 60,000s down to low 30,000s. And taking a look at the amount of mining outflow, that is Bitcoin accumulated by the miners, well, they clearly had a higher outflow here at the end of December, and then again at the end of January, and then again at the end of February. So these vertical spikes here. We have relatively low Bitcoin flowing out here during the time of this crash, which is not in itself sort of the be-all, end-all statistic or piece of data, because miners are going to do what they're going to do. But it suggests that, miners have always built up their reserves and they want to optimize their exit points out of the cycles. If the miners don't feel like we're at the peak of a bull cycle, then they're not going to sell. They're not going to have Bitcoin outflows. And that curiously is what we're seeing here. Again, just one piece of data, but I think this is an argument that supports the ongoing bull market, even if it is an extended one and a modified one, a little bit of a different one. And then to be fair, on the other hand, we did see this resurgence on the part of the exchanges. So total amount of Bitcoin transferred to all exchange wallets. We were I think, talking about almost boastfully about how nobody's selling their Bitcoin. It's a net outflow out of exchanges. Well, now all of a sudden we did see an inflow, unfortunately. But based on the statistics and the data that I've been seeing, this is largely based even on, or I should say it's based on a lot of the retail that has chickened out, unfortunately. A lot of the weak hands in the space. Even some people that got into Bitcoin maybe more recently. But that is what the data suggests, that more recent acquisitions here have been sold off over the course of these last few days by baby whales and just everyday retail folk, again, as well as some institutions. I was perusing some of the figures, and there certainly are some institutions that have sold for profit at local tops. That's, I guess, unfortunate, but that's the nature of the game here. So the total amount of Bitcoin transferred to all exchanges wallets, you can see a pretty pronounced inflow of Bitcoin to exchanges, likely for selling purposes here on the 18th of May. So that's to kind of counterbalance my last point about the miner outflow. It's something we'll have to keep an eye on, but I am of the belief that all of this is sort of an acute, temporary set of painful symptoms, if you will, and just based on a lot of other factors that we've talked about in previous videos. We don't have to get into it here, but I am of the belief that we're going to be in more of an extended bull market that is not yet over. Let me know where you guys stand on that in the comments below. I'd be very curious to pick your brains collectively and kind of get a sense of where the morale is at. And by the way, we have a morale booster at the end of this video, so stay tuned for that, as well as our $50 Ethereum giveaway. I almost forgot, but do stay tuned. We're giving away $50 to one lucky winner in ETH. Winner will be announced at the end of this video. So you could see here, there's a whole bunch of articles sort of covering what's been happening as of late. Bitcoin, Ether bounce after, yes, a disastrous week for crypto, I think is an understatement. Take a look at that on Coindesk.com. Here on Forecast.news, Bitcoin dominance rises to 45% as altcoins crash over China crypto crackdown. Yeah, altcoins did crash to ridiculous and irrational levels. Take advantage. Take advantage of the fears of others. If they're willing to go to that extent and to sell off that much and to provide you with your favorite projects at a discount, take advantage. But you got to kind of like flick on that contrarian switch, right? You got to become a savage and just forget about your emotions, almost go against your instincts. But if you have a conviction, you say, I am accumulating as much as Project X as possible, and Project X goes on sale 50, 60, 70, 80% off. You know what to do. You have a game plan, not financial advice. Continuing here on CNBC.com, Bitcoin rebounds after a wild weekend that took it below $32,000. And now we're going to launch into kind of a macro perspective as to, I think, a supporting argument as to why I was saying earlier that the bull market isn't over. There are a lot of other factors right now at the macroeconomic level that I think support an extended bull market. And there are a lot of problems that analysts, that economists have been pointing out that are not going away. We've talked about Michael Burry recently. Michael Burry, by the way, if you're not familiar with him, Michael Burry is what could you call him? Like a renegade economist or financial guru, I suppose. He's the guy that called the housing crisis back in the late 2000s. So he bet against the housing market. He shorted the market. You may be familiar with the movie The Big Short or the book of the same name by Michael Lewis. So The Big Short, that's the story of Michael Burry's big bet. And as we all know, we've been talking about it recently, he feels that Tesla is overvalued. So he's put in another big short, if you will, against Tesla to the tune of about $500 billion. The argument being that, look, Tesla is overrated because they earn the majority of their revenue by selling carbon offsets to other automakers. They sell carbon credits effectively, which I didn't know. And I thought that was very, very illuminating. That was very interesting information. So Burry's contention is that, yeah, but look, every other automaker from Lamborghini to Harley Davidson, like every vehicle manufacturer is getting into electric vehicles. So the more EVs they have in their fleet, in their catalog, the less that they need Tesla. They're going to be able to do just fine on their own. And as such, apparently Tesla's EV division, their vehicle sales, is not actually as profitable or generating as much revenue as, you know, would be healthy, given their metrics and whatnot, and their company health, their financial health. So Burry says, you know what, I'm going to short Tesla. That's his contention. We've been talking about him in that context, but he's come into the news again over the course of these last few days here on Markets Insider. Big short investor Michael Burry predicted the inflation spike a year ago and sounded the alarms multiple times in February. So you have Michael Burry, who seems to be a proponent of fiscal responsibility. He's not into this whole year that we've seen of quantitative easing and stimulus packages, and also, you know, in my just kind of editorializing a little bit here, irresponsible spending on the part of governments around the world who are basically indebting their citizens, forcing them to borrow from their future selves. The result inevitably is going to be inflation. We've been seeing that now. Certainly we've been seeing that. We've been seeing it in terms of a lot of things. May I remind you of this piece here on Axios.com, the wild ride of pandemic consumer prices. And this is from a while ago. This is January to March of 2021, so Q1 2021. It's quite a bit worse depending on what you're looking at this right now for this Q2. But we're seeing laundry equipment up 29%, trucks and the used car market, that's up extraordinarily. Appliances, propane, kerosene, firewood, pork chops, chicken as well is up, coffee, things like that, used cars and trucks. There's some other assets and commodities here that are down based on usage. But, the CPI, the Consumer Price Index came out at 4.2%, and that was very high. That caused a lot of concern. But just about everybody knows that the true figure is much higher than 4.2% because that doesn't include gasoline. That doesn't include things like building materials, lumber, steel, precious metals, things like cobalt and other construction materials, industrial materials. These things are up 2, 3, 4, 500% over the course of the last year. And we're led to believe that the Consumer Price Index is only 4.2%. That is a 4.2% inflation spike since last year. Whereas, I'm Canadian, I'm not American, but I go to the supermarket and I look at the cost of my chicken breast. It's doubled. It's doubled over the course of the last year for, let's say, 1 kilogram, or if you use the non-metric system, you have however many ounces of chicken breast. It's twice the amount that you would have paid a year ago for that same quantity, twice. So that's a 100% increase right there. I know that's anecdotal, and I know you can't extrapolate from an anecdote, but there it is. It suggests that, and I think a lot of people have this feeling that 4.2% is a lowball estimate, to put it mildly. So Michael Burry, returning to the Big Short guy here, he's obviously famous for his predictions. He got it right in the housing market. He's gotten it right a couple of other times. He's now warning of a Weimar-like hyperinflation scenario that could potentially come to America, talking about the phase, I believe, after World War I, where sanctions and penalties were put in play against Germany, and they had wildly inflating currency to the degree of hyperinflation, in fact. So Michael J. Burry, the hedge fund manager who made hundreds of millions of dollars, yes, we all know, warns of Weimar-like hyperinflation in the United States. Burry, who runs Scion Asset Management, tweeted over the weekend that he fears prices will go up, citing skyrocketing supply chain costs and U.S. retail sales, which increased 5.3% in January thanks to stimulus checks boosting the economy and trillions more planned. The U.S. government is inviting inflation. It's inviting inflation with its MMT-tinged policies. Brisk depth M2 increases while retail sales PMI stage 5 recovery. Trillions more stimulus and reopening to boost demand as employees and supply chain costs skyrocket. So, going back to the success of some of our favorite projects here, Chainlink and others, I'm of the opinion that what we saw was a little bit of a flash in the pan. I've talked before in my more, tinfoil hat videos about how I really do feel that this attack against cryptocurrency was coordinated. Who cares that China is banning something for the 100 millionth time? Who cares that there's a headline about how Bitcoin is, it's not the cleanest energy in the world that goes into it. It's 75% renewable. What other industry can you point to that is powered by 75% renewable? Can you name one other than, like a green sector project? I can't. 75% renewable. In other words, these are cherry-picked stories and statistics that mean very little. And I can't go so far as to say I know it to be true, but what I suspect is that, the real story is that it's all been a distraction from this lingering problem of inflation, this much bigger problem that is not going away. You're having more and more billionaires that are coming out that are suggesting that the U.S. Reserve's global currency reserve status, those days are running out. Those days are limited. And very prominent individuals talking about this kind of thing, not only Michael Burry, but Stanley Druckenmiller and others that are really starting to sound the alarm. This is not a problem that is going away. Falling crypto prices is a problem that is going away. It happened. It was violent. It's an over-leveraged set of, in industry as far as its investors, but already you can see that we're on the rebound. I suspect that we're going to continue to rebound. We were at $2.6 trillion. Okay, we lost $1 trillion. That sucks, but it's a binary thing. Is crypto either going to keep growing or is it going to go to zero? Make your choice, 1 or 0, 1 or 0. If you feel it's going to keep growing, then we're going to get back to 2.5, 2.6 trillion. We're going to get to 3, 4, 5, 6, 7, 8, 9, 10 trillion dollars, 15, 20 trillion dollars and more. Bitcoin will eventually, its market cap, I should say, surpass that of gold, and we're going to keep growing. Don't get too discouraged. That's all I have to say. So on that point, I know we talked about a lot here, but inflation to me is the elephant in the room that nobody is really choosing to address right now. And if you're in need of a little bit of an inoculation against the FUD, check out this piece here on CNBC, this from a couple days ago. Michael Saylor talking about how Bitcoin is coming to life. The volatility is the price you pay for it to be 10 times outperforming the S&P index over a decade. I couldn't agree more. All right, guys, let's get to that $50 Ethereum giveaway. All right, here we are on the homepage, Altcoin Buzz News. Let's go back to this piece here. More Bitcoin China FUD. Pretty laughable if I do say so myself. So this piece, as you can see here from the 21st of May, you guys are doing pretty well with the comments. It's getting certainly better, 428 comments, but still only 103 likes. And as you guys know the rules, you have to, number one, like the video. You can't just comment, you got to like the video. You got to help us grow, right? That's the whole idea behind this incentive, behind this giveaway. Like the video. Number two, comment on the video using the letters ETH, ETH, or the word Ethereum. And finally, number three, subscribe to this channel, Altcoin Buzz News. So with that being said, I'm going to go ahead and take the URL of this video. Okay, I'm going to copy that. And all of this is done live for full transparency, right? I want to kind of be as honest as possible. As long as you're not a multiple commenter or a previous winner, then you can stand a chance to win $50 worth of ETH almost every day. The winner today is ETH. Technically, yes, Peter Eaton, you win. I didn't see it initially because I didn't see the capitals ETH, but Peter Eaton, congratulations, you are the winner. ETH, my Matic holdings have exploded. Hey, congratulations. And as we go back and take a look at these last 24 hours, once again, not quite at the top. It's, I guess, been surpassed now by Maker, but Polygon, ticker Matic, is again up 74% on the day. It hit that recent all-time high of about $2 and I want to say 50 cents, but maybe it was higher. Let's check here. So Matic went as high as $2.62, as you can see, down quite a bit over the course of these last 7 days or so, these last several days during this flash crash, down all the way to 86 cents. We know Matic has a bright future. We know Polygon has a bright future. So case in point, you got to buy the dip. Not financial advice, but that's how winning is done. You buy the dip, you buy red, you buy the red to enjoy the green down the road. So congratulations to Peter Eaton on those Matic holdings. Congratulations as well on your $50 worth of ETH. Peter, please go back to this video, which we published, when was that? On the 21st of May. Go back to that video, Peter. Find this comment that we're referencing right now and reply to your own comment with the same profile with the address to which you would like us to send your $50 worth of Ethereum. It's that easy. Congratulations, Peter. Guys, if you like this kind of content, of course, be sure to like and subscribe to Altcoin Buzz. I don't know why I'm on this page. I got to go to the website. We're on altcoinbuzz.io. Keep checking into that website. Keep following us on all the regular social media channels. None of this is financial advice, of course, but best of luck if you do choose to invest. Have a great Monday, members of the Altcoin Buzz Army. A great start to your week. And as always, stay safe. We hope to see you again soon in our next video. Take care.